Good morning, everybody, and welcome to the morning volatility report. It is I, Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to our morning report on volatility. Oil vol too high, blogged by Mark yesterday. You know what? All I can say is take a look. All right, we'll use USO for a proxy. Vol starting to drop a little bit. Oil prices, let's just call them stable. We continue to rally. We're at all-time highs, and all we could say is we have been out of the way as far as this rally goes. Not necessarily fading it, not believing it much either. I think the best play really is just on Gamma. We still have a VIX 1324. I'd say it's going to be harder for it to drop. It seems to mark down every day and then kind of rises again. Mostly because we're still moving quite a bit. We seem to be gapping up 0.5%. Market rallies, continues to rally. So we're still getting basically, let's just call it the string keeps being pulled farther and farther and farther up. And whatever the Brexit thing was, U.S. stocks don't care at all. We had, I guess, a decent earnings report from Alcoa, which, kind of bellwether industrial. Certainly, I think, again, any good surprise now the market really likes. We've liked that non-farm payroll report, meaning there is some strength in the economy. Even though maybe the recovery wasn't as good as everybody thought, it's a lot better than everybody else's. So I'm sticking with the fact that the U.S. still looks like the best thing going. And I think that's what we have. It still looks like the best thing going overall. For the first day, we're actually starting, or the second, from 143 bonds to, we're actually starting to see a real decrease in prices. Yields are finally starting to go back up again. Yeah, I think possibly because the reality is the ever-changing interest rate rising decision-making process that we seem to have every month. That does not seem like it's going away. That might add a little volatility to the mix at some point. But we just keep moving higher. And you've got negative interest rates in Japan. You've got really deflationary pressure in Europe. Also, it sounds like the Italians might kick in public money to do sort of a TARP thing, which actually worked really well in the U.S. Why the Europeans don't do it, I do not know, but they seem to do things in their own way. Things like that, though, and again, this is again a bellwether stock. It's up $1. We looked at a lot of this stuff yesterday in the chat room. Basically, just buy Gamma in the financial sector. We looked at a couple plays where to finance selling puts in this stuff and financing long Gamma in the other, because all these European stocks are kind of in the basement. I didn't think that was too bad of an idea. It looks like it's working out okay today. And here's another thing to look at overall, right? So you've got U.S. equities are at all-time highs. And, the financials, they're certainly not where they were, right? Even not very long ago, okay? But there's still, there's still some room there. Still some room if we think if we actually start to get some interest rate spacing again in the near future. You get a little bit of a slope to the yield curve, and all of a sudden financial companies can start making money again. So this to me has been the Deutsche Bank we've looked at a couple times. As a bellwether, they took a big chunk out of the volatility today. And again, I think the financial sector really has the volatility is the cheapest, I think, for the bang for the buck you can get out of it. So with that, I would just continue again. look in that area. The European banks are the things that are really giving us what I would say that could be the structural volatility issues, with a bank collapse or something like that. But it sounds like they will come up with some sort of TARP-like relief, and again, that will send stocks higher here, as has been the pattern. So again, I would just get out of the way of the rally. I still think maybe upside time spreads, and I would say even upside flies, because the way we rally, I think are going to be hard. Because right now we're having no problem gap opening, rallying up. So, be careful with the short contracts. Iron condors are going to have been troublesome because we just keep ripping through everything. So we have to keep the deltas flat. So again, I like the financials as far as strength goes, because if the Europeans do step in, right, that will give the Fed more ammo to lift rates. If they do that, all the financials do a lot better. So gamma, the potential move in financials, I still think is some of the biggest around versus the dollars you're spending. All right. And with that, I'll see everybody in our chat room shortly. And everybody else, have an excellent day. Bye-bye.